All right, guys, welcome back to the channel. We have seen a new low for Bitcoin, down 23 days from the all-time high, 17,200 bucks, and nearly 16% from that top. If you're not getting excited yet, you possibly should be. Even if there is further drops, the risk and reward is beginning to look a little more favorable here. And that also extends to the market sentiment, another very significant signal which has called the lows of the market every single time throughout history. If you want to see more of that, make sure you hit the like button, subscribe to the channel if you are new here. It's your home of macro cycle analysis. I'm going to cover Bitcoin, cryptos, the stock markets, and of course the real estate cycle as well. So we have a ton to get through today. Let's kick it off with our agenda. Quick recap, you'll see this at the end of the video, so stick around. Yesterday's video looking at signs of a local top, I went through that in more detail, so we'll skip over that for today so that you're not getting more double ups. And just the pure raw data for today's video, looking at the major reset, the fear and greed index, the 3-day rule, which again called a very significant turning point in the market. Timing, price, USDT dominance, another very solid chart that I've used here for trend changes in the market. But first, let's just have a look at what the US is doing, and it's going to be a very quick one because the markets were closed in the US overnight. The US markets were all closed for former President Jimmy Carter's funeral, and therefore not much has changed in the last 24 hours. Something that we can now reflect on are the number of days down to a new low. And this current move is at 24 days from the all-time high to the current price point is at 24 days. So now this now exceeds many of the previous corrections in the S&P 500, and we can start to look back to some of the longer term timeframes here for corrections, consolidations, and then breakout moves after that point. And we've got a couple of points here, a couple of days, timeframes, 40 days, 60 days, and 90 days. So that would be the next levels that we're watching in terms of timeframes. And if we do get those, so looking out to, let's say, the 40th, then you're coming into the end of the month. The 60 days is mid-February, and then the 90 days, you can see here, is March. So all pretty interesting turning points. March has been many lows and many turning points. Could also be tops, obviously, being a turning point in the stock markets and for Bitcoin and cryptocurrencies. But we just take it one step at a time, just looking out towards 30 days, of course, is the monthly turn. So that's mid-January. You've got the inauguration coming up in about a week and a half, 10 days time. And then the 40 days, as I just looked at there, brings you into the end of the month. For the downside, price target's the same, 56 to 5,700 points for the first stop. And personally, for my analysis, for my macro thesis here, I wouldn't want to see the 5,100 point low get taken out. That was the Japanese yen carry trade fear of August 2024. I'd say if we did break that far, things are looking like they're changing. But for now, any of those other moves to the downside, basically healthy corrections for the S&P 500. Same sort of thing here for the NASDAQ and the Dow Jones. The markets were closed. Price targets still remain 19,900. Any breaks lower than 17,500 points, 17.3, things are looking like they would change. Next up is the VIX. And something we looked at in yesterday's video was a moving of higher lows on the VIX that might suggest we're looking towards some sort of spike in the S&P 500. So some sort of fearful news event that again brings out a low or very close to a low. It happens basically every single time in the markets. You get the S&P 500, you get the NASDAQ, whatever it is, and people freak out towards the low. Just take a look at the last few here, actually. You got October. Not to say that these events or these news events shouldn't be taken lightly, of course, but it happens at the exact points or very, very close to those lows where people freak out the most. And so we had the, just before the election, that was through here in October. Then we can go all the way back to the Japanese yen carry trade. Very, very extreme point in the market, nearly 10%. Prior to that, you had the Middle East conflict in April. Prior to that, you had another Middle East conflict in October 2023. You had the US debt ceiling crisis, then you had the US banking crisis as well, basically right into those lows. And again, it's the market climbing the wall of worry, which is why I'm still of the view that the macro cycle is still in play, meaning the bull market's still in play, still further upside, even if you see short-term downside. To me, I don't see it being that difficult to keep following along. You could see the higher lows continuing to form. Yes, in the meantime, you have to shift your views between short-term downside or short-term bearish, but still looking at the overall picture. And the overall picture is very much up. And this one here looks amazingly up with some diagonals connected from the previous cycle top. So that's 2007, the GFC crash, sorry, that's the COVID crash there. The GFC crash low, and then these are connected to the tops in 2022. So the top and the bottom. So that's basically the bounce out of the COVID low when they started printing all that money, and then that correction that came, that roughly 20 to 25% correction. So we have two data points there, the lows connecting this range. Now you can look at where we just hit, well, where the S&P 500 hit, and it hit dead on the top of that range again. Do I think it's going to get to the bottom of this range? No idea. I have no idea. Personally, I'm not playing the game as if it would hit that low, because if it was to get to that low, that would break down some pretty key levels. So if you're on the extreme bearish side of the market, well then yeah, you're probably looking at a reset and the market hitting those, those price points. This can come all the way back to 4,800 points for the S&P 500, which would still be above the previous old all-time highs. But I'd be more inclined to look at something through the center points. And if I could draw a reasonable diagonal there, the center point would come out somewhere in this range here. I think you'd probably be getting somewhere towards the low 5,000s or the mid 5,000s, depending on what time it hits those price points. So that one there, I think, is an interesting one to watch. I'm not taking this thing to the bank, but just in terms of those diagonals and where the market's moving, pretty interesting one, especially when you look back to the dot-com boom of the 90s, which maybe we're going through some sort of 30-year cycle here, right? And we're getting some AI boom as well, because once it breaks out of these tops, especially on what we are here as a logarithmic chart, it can go haywire to the upside. So if this is building now for some sort of reset before we get to that top again, and maybe even a breakout of this logarithmic resistance line here, that could send things ballistic. So take it with a grain of salt first, but take it as your absolute massive hopium for the end of this cycle. That would be the blow off top that you'd be expecting or looking for if you're in the camp of a blow off top. I think it's got to break through those levels and go a little bit crazier to the upside. Let's wait and see. I won't go on about that too much more, because at the end of the day, you never know. The US dollar also has been climbing slightly higher. As I said earlier, the markets have been closed in the last 24 hours. We'll get another day's data in the next 24 hours. But again, it's still holding up relatively well above the 50% level. 107, 109 is the resistance level that it currently sits at. And to the upside, you got the 112 and 112.8. They're the next resistance levels I'm looking for any sort of rejection here for the US dollar. And we might even anticipate that there would be some pretty extreme news. If that came in at these levels, that you had some extreme news around why the US dollar is going to take over yet again, then I might look for some sort of rejection there. Of course, early days. Let's see what happens over the course of 2025. So over to the agenda again, the major reset after we looked at the traditional finance space. As we do, we've got fear and greed and the 3-day rule. So the fear and greed is actually reset back now to neutral. It's what we've been anticipating and I guess hoping for the major reset, where each time that the Bitcoin crypto markets get a little bit overheated, they have reset from extreme greed to at least neutral. So we have the first day there. We've also seen liquidations remain elevated. You can see they were quite low for a couple of weeks here, and then they got up there. You had $500 million, another $500 million, and just in the last 24 hours, just short of another $500 million. So we are seeing quite a lot of liquidations, which essentially, it's bad for people who are getting a little bit over the top with their trading and getting liquidated, but it's necessary for the markets to reset kind of like the bushfires. I've used that analogy before, but it might be a little bit out of taste with what's going on in California at the moment. Take your pick, right? Bushfires clean out the bush. Okay, so we have the USDT dominance before I get on to the 3-day rule, which maybe most of you should be aware of by now. And we have the USDT dominance. Okay, so we've broken above 4.2%. Key level there. This chart going up, not good for Bitcoin and cryptos. This chart going down, fantastic for Bitcoin and cryptocurrencies. And so we've seen another higher low now confirmed. You've got the break above the halfway point and now coming to test 4.4, which were those previous tops. And then you got your 50% level at 4.6. So long and short of it is you've started to see more strength form here. A higher low, a break above the diagonal trend again, which was retested, failed, and then broke above. So fake out to the downside and break above. You've seen a close above the 50% level, another sign of strength. You've seen another close above the 50% level, so 2 of them now, and above the diagonal here. So this is the diagonal that has connected both of the cycles together. 2017 top and 2021 top. It also hit for March 2024. So that was the previous top at $74,000. And it found support at those levels, support, and then strength came to the USDT dominance, which was not good for Bitcoin and crypto. So not good for the bullish side of the market. Okay, so now in the last 24 hours, we've seen a daily close above that level. One day on its own is really not enough. If you want to get super granular here, you can see you have one day, sat on it, closed back underneath, another day underneath, another couple of days back underneath. We're at 1 day now. So if this was to continue on over the next couple of days, that would be weakness for Bitcoin and crypto prices. You would essentially see those continue to, well, you see Bitcoin and cryptos continue down, but we'll get to those in the charts in just a moment, and it'll continue on with the reset of the market, which we've been covering now for a couple of months, going back to those November periods when this started to slow. It looked like it was getting ready to ramp up until it found support and then bounced, found support again, and it just started to grind away from that point. So 4.6, 4.8, not going to be great things for the market overall. That leads us to Bitcoin now. So down for 23 days. It got rejected at the 50% level. Down again, another 3 red days there. Not that that's important here, but we're looking at 3-day rule, lower highs, lower lows. Forget the colors. Yes, this one is green. Still get comments about that. Absolutely okay. But this is from a significant turning point, not just any turning point. And so you might question this part here. You had 3 green days up, or 3 higher highs, higher lows with an inside day in there. However, this area of support at that 91 is not as significant as this turning point here. So although it was able to stop the market and hold the market up for a period of time, and it's still holding it up, even though we saw $100 lower, this is the stronger, at least for my analysis, this is the strongest signal here. And until we can overcome that top, this is still in play here. And what it's done is help us to identify, on top of the other signals that I've talked about here, that probably coming to a slowing here of the trend, at least a slowing. Worst case for the bulls, and if you're looking for higher prices, worst case is lower prices. If you've got money on the sidelines, obviously, well, you start to buy the dip. But this also tells you, don't buy the dip too early, because there's probably more downside, or at least more time coming for the prices to remain stable here, or maybe see, as I said, further downside. So in terms of the downside, we've just had a close below the 50% extension here. So we're looking for the weekly chart. So here is the weekly chart. And this is taking a measure of the top to the swing low here to the now current swing top. And this market has just broken underneath that low. Last week's low, 91,300, and this week's low, 91,200. So we do have a lower low and lower highs. So there it is, 1 week, 1 bar, you've got a downtrend now. So if this week closes out here, closes below 94,200, I'm looking towards that $85,000, $86,000 level, potentially further, but that's the first target. And that target is a 100% repeat of the move to the downside. So top to bottom, that would give you your, $16,000, and then you project that $16,000 off that top, and that gives you the overall price target. In terms of a percentage, about 21%. So really nothing too different to what's happened in the market throughout this entire bull market. These were all 21% drops through March, through 2023, another one here. This was the largest one of 33%. So I'm not looking at 33% yet. We still need to make it to the first target and then focus on the next ones from that point. You've also got the weekly 50% that comes in at $85,000 to $87,000. So you're starting to see a few price clusters here lining up with the extension. If on the daily, you start to see another at least 2 more days closing below $94,000. So that is, well, Friday's bar, Saturday and Sunday, which aren't the greatest because they've got low volume on them. So we'll have to look towards Monday as well, just to see if we can get a little bit more volume in the markets, whether we do get the closes or we don't. If that ensues, you would expect that cryptos are also going to get a little hammered. And I'll get to cryptos in a moment. We've got Solana, Sui, XRP. So for BTC, that's the other rule there. We looked at 3 days. We have looked at the timing. The price came up at those quite specific levels. This, to me, I think is pretty incredible. It happened in 2017 as well. Roughly 480 days to the top. So what I'm measuring here is the cycle low to the March top. Took about 479 days to be exact. That was $58,000 to the upside. Then Bitcoin did the almost exact same dollar move in 28% of the time. A quarter to a third of the time. So you're getting the same dollar move to the upside. Another $58,000 move. $49,000 low plus $58,000 gets you to about that $107,000, $108,000 BTC, and it hit dead on that price. So it did an exact 100% repeat, but in a much shorter period of time. And that period of time is there, 134 days. So the level of interest is obviously picking up steam, and you're seeing the price run the same. It took almost, a year and a half to do that, and then it did it again in a matter of 4 or 5 months. And you look back in 2017, pretty uncanny stuff here. You had 520 days, so 40 days more than the last one, ran up, and then within a matter of 156 days. So again, roughly about 28% of the time it took to do it in the first case, it ran up the same amount. It pushed slightly higher and then got rejected, pretty massive rejection. And at that time, it was at basically a similar time. It was January 2017. We're now in January 2025. Got to get my numbers right here, 8 years later. And you see a very similar pattern happening at the moment. That was quite a severe correction, bit of a climb back here. Another severe correction, which could have been looked at as the game over because you had a test above the highs and then a failure. What was a saving grace was the higher lows continued to form, and then the market was able to consolidate and carry on from that point. Now, just as something interesting from there, 150 days later from that low, you had about a 4 or 5 times the move that you'd just seen. So look up to this high here, you had $2,300, and in these couple, you had $600. So it did 4 times the move. Can that happen again? Of course, anything can. I'm just trying to throw a little bit of extra hopium on the cake here. I don't think we would end up seeing a 4x move in the same time. So that would mean Bitcoin, wherever we low from, doing 4 times to the upside in the same time there. So 4 months could go from, call it 90 grand, 4 times that to $360,000 in 4 months. Could it happen? Let me know in the comment section. I'll leave that as a pinned comment. I think that's absolutely wild if it was to do something similar, which it has done already, almost to a T at this point, or at this point in the cycle. That would mean roughly from $80,000 or $90,000 4x, you'd be going up into the mid 300,000s before June 2025. Can it happen? Pin comment down below. Now I'll reset the Miro to the gray background. We've looked at the major reset here, the 3-day rule, the timing, the price, the USDT dominance, the fear and greed, something that happened at every single top, then the reset, is right here. And then we went through this in more detail in yesterday's video. So I'll just do a quick overview and I'll leave a link to yesterday's video at the end of this video. So stick around. I've still got the altcoins to get through. And as a quick view here using the crypto fear and greed index, you can find this in TIA indicator suite. Links to these are in the video description down below. Plus we also have the free crypto and economic report with some guides there on how to use the swing indicator. That is the link right here at the top of the video description. If you want to find out more, if you know what you're doing, go down here and use the indicator link down there. You got 7-day free trial as well. Now, with the fear and greed here, we're looking at dark green, really, really simple, and where it resets to. And almost every single time in history, it's reset to fear, which is the orange. But what we covered yesterday is we found that it reset to neutral every single time after it went into dark green. Now, I've put this onto weekly so you don't have as much data there. Just clear it up a little bit, and you can look at the dark green down to orange, dark green to orange, dark green to orange, dark green to orange, maybe a little bit on red, dark green, this one to red. And most recently, we saw a dark green. It took a while longer, but it did hit orange again. And now you have to put it on daily here because the week hasn't finished. Dark green now into neutral, which is the yellow point. But this, besides this one here in March into May of 2024, where it basically just touched for a few days and then bounced straight back out, most other times it lasts in the yellow, in the fear, and sometimes creeps back up into greed for a number of weeks. You can see here in 2024, dropped into the yellow part being the neutral, and that lasted from roughly the mid of the month until it got to extreme greed again into mid the following month, into February. So it was about a month there before it hit the extreme greed again. Taking a step back into the previous cycle, you can see it drop down. These big spikes lasted still several days before they went back up into that extreme greed. So how long might this last? 1, 2, 3, 4, 5, 6. Look, a couple of weeks there, another few weeks here, and then it all started to roll over from that point. Now, I don't think we're at this stage just yet. Maybe something more like this, hitting that extreme greed, dropping back down, and then finding its way higher. So if we've just started that journey of resetting, it could still be at least another few weeks before we see sustained moves into and holding above the extreme greed reading. So this is a good thing for the market. We're seeing that reset, and it's something that we had covered up, started looking at with the top forming when we saw the 3-day rule, when we saw the timing coming in. Some of the price targets were met, like we saw with that 100% hit. And of course, the big one that I found to be very, very useful is the USDT dominance. Speaking of which, let's head over to some of the altcoins as well over the last 24 hours. Some have broken down some key levels here. ETH in particular is down past 3,300. It's dropped to 3,160, still above the 50% level, still above the $2,800 support level, and worst case scenario between that $2,100 and $2,400 level. Have seen the volume increase a little more, relatively speaking, to the last few weeks, which isn't a great sign. And over the next 24 hours, for these markets to at least remain here and consolidate, you'd want to see it back above the previous swing lows. That's an objective look at how you can find some strength and weakness in the market. So you can see the swing lows here using your GansSwing Pro. That price is roughly around $3,300, so not far off it. So that would be the first step back for some strength. However, as I've talked about before, I think we probably still have a little bit further to go with the fear and greed, possibly a little bit further to go with the USDT dominance, and then also for the traditional markets, stock markets out there, it seems like they still need to reset just a touch more, maybe longer than what we are willing to sit around for. As for Solana, so this is the Sol USD chart, it also broke down underneath the 50% by a couple of dollars, and now as I'm filming this, it's trying to reclaim that low. The benefit here, or the beauty about a lot of these, I guess, stronger alts, at least in the shorter term here, is that we're looking for them to continue to hold up at these lows. So at the moment, unconfirmed yet, but you've got higher lows. So if this was to be the low, you see a day up, another pullback, that would then continue to confirm in the short term that you're starting to see a little bit more of the strength coming back into these altcoins, and it's above the 50% level, which is another great sign. And you can see overall from that August low, it's just a matter of higher lows along the way, even though the emotions have been swung left, right, and you name it. For SUI USD, however, we saw the close underneath those previous tops, which was very similar to the last topping pattern that happened back in February, March, and then April, when it started to come down from there. So if SUI does not close above the $5 or $4.95 level, then this is likely going to come back and retest somewhere around the $4 level as the first price target. And for XRP, it's also failed again at the 50% level. Downside still okay, you got $1.90 there, and you still have $1.60 for longer term support. And as I've covered before, we're watching these time frames for XRP. It has a rough time frame for how long it can last to the upside, and then it also has, well, that's for the macro here, roughly around a year, that 52 to 57 weeks from the starting point. And then when it goes on these big bursts like it has done in the last couple of months, it generally lasts roughly 2 to 6 weeks and then goes on a pretty significant downtrend before it reloads to then attempt another crack at higher prices. That's happened over its entire history. Back in its first cycle there, or the first big bull market of 2017. Then, of course, yes, you had your SEC cycle where not as much happened, but it still did the same thing, the same time frames, very similar corrections, 50 to 70% from those points, and then reloaded again and had another crack right now. So if history is going to rhyme for XRP, those downside targets, you're looking at 50% from the top, roughly that sort of $1.40 to $1.60. If something happened at 70%, then you're looking back at the previous tops at around 90 cents. I'm not saying that will happen because I know XRP people, the ones who are very stuck to their cryptos, get a little bit emotional about their money. But yeah, basically, even if it did that, worst case scenario, even if it did that, you're still sitting, provided you've got the weekly and the monthly closes above those tops, you're still sitting above previous old resistance, which could become support. So the looks of it, with the worst case scenario there, it still looks like it would be in a relatively strong position and something that's done in the past. Now, if it did do that, it's not saying that you're going to get your $10 XRP. Because if it did do something like that, it could still bounce. You could still get some really good trading ranges. But in most of the other cases, it's basically fallen short. But of course, we're only here for the hopium. So if it does do its 70% correction, potentially like it did in 2017, cross your fingers, maybe it'll go on another 10 or 20x run from that point. So maybe it could hit your $9 or $10 after that point. Now, if the video wasn't enough hopium for us, even if Bitcoin does correct into the $80,000, ETH into the 2000s somewhere, then you can go and check out Michael's X post. This one here is looking at timeframes of each of the previous Bitcoin cycles, and we often see very similar things throughout them. So I'll leave a link to Michael's YouTube channel in the video description. Speaking of which, don't get scammed out there. I only have YouTube and the X account, no Instagram, no Telegram, no WhatsApp groups. Don't get scammed out there. Use the official links in the video description along with the channel sponsors for your crypto exchanges. And I'll see you guys back here for the next video. Until then, take care and peace out.